QuickBooks Enterprise 2021. Two businesses and personal bookkeeping in one QuickBooks file using classes, two accounts payable accounts. Let's boldly account where no accountant has accounted before with QuickBooks Enterprise 2021. Here we are in our QuickBooks file. We currently have the open windows open. You can open the open windows by going to the View dropdown, selecting the Open Windows list. In prior presentations, we have set up our classes so that we could be tracking two different businesses or two different locations and personal file in one QuickBooks file. We've been focusing in on the vendors section. Last time we talked about entering the bills, and we entered the bills into one accounts payable account, but breaking them out into separate classes as we do so in that one payable account. Now we're going to think about setting up two accounts payable accounts and how we can manage two accounts payable accounts. So to see where we stand at this point, let's take a look at the financial statements. Go into the reports dropdown, company and financial. Take a look at that balance sheet by class. Balance sheet by class. We will then change the customized report for the range of the dates up top, which will be 01/01/21 to 12/31/21. We're going to say then OK. And so here we have our one accounts payable account. It's now being broken out between the three categories, B1, B2, B3. That works fine for that breakout, but it might be a little bit more difficult for us to manage the accounts payable. If we have a lot of accounts payable for both the businesses, then we might want to kind of separate them out as much as possible when we think about paying off the bills. And for that, we might have two accounts payable accounts as we did with the accounts receivable when we considered a similar option on the receivable side. Now remember, for many small businesses or a business in which you have one business where you use the payable more than the other possibly, you might be doing quite well with one payable account. It would be the case where you have like two businesses or multiple locations where you want to really track and manage the payables that you're going to be paying separately, that you might want to then consider two payable accounts. So for example, if I go to the home page over here, and I wanted to manage the payments of the bills, if I go to pay bills, even though I entered them with different classes as I entered the bills, they're in one payable account, and I'd be basically sorting them all in this one window with the one payable. And if I had a whole lot of bills, then maybe I would rather have my ability to sort them out by two payable accounts here. So let's test out that option. I'm going to close this back out. I'm going to say you have bill payments. I'm going to say no, don't record any bill payments. We're going to go then to the list dropdown. Let's take a look at the chart of accounts. And let's make this first payable account then, which is in the payable section. Let's make that for B1. So I'm going to right click on it. I'm going to edit it. Let's edit the account. And I'm going to say that's going to be the payable for B1. And then I'm going to save it and close it. And then I'll make another payable account that will be close to it. I'll make it with a 100, so 20100. Account rise up, and it's going to be a payable account. So I'm going to say this is going to be a accounts payable, and continue. It's going to be 20100, and then it's going to be accounts payable B2. So accounts payable B2, and then we'll save it and close it. So now we've got B1 and B2 set up on the payable side of things. Let's go into the home page now. And if I was to enter our bills now, I'm going to enter the bill. Let's say we're going to enter a bill. And so here we have our bill. Now we have the drop down between B1 and B2 for the bills. So I got to drop down B1 and B2. I could choose which one to be going to. We've been allocating to B1 because I just renamed B1. That's where all the bills have been going prior to this. Let's enter one in then to B2. So if I select an item, and let's say we're going to go to the insurance for B2. So we have it now lined up. We got kind of a double checking kind of factor here because we have the B2 account here lined up to the B2 account up top. And then it's going into the insurance, which is a 7 series number on the expense side, which also indicates it's for B2. And we have the class then that will be assigned, which will be the B2 class. So let's say this is going to be 1,000. We'll say 1,000 for the insurance. Let's increase the date to the 31st. So we'll say to the 31st. So this is going to be increasing the accounts payable for B2 now, a separate accounts payable, and it'll be putting it into the column of the B2 column, increasing the expense in the 7 series for B2 and putting it into the B2 column on the income statement. Saving it and closing it. And then let's check it out. So if I go then on over, let's go and open up the profit and loss, reports drop down, company and financial profit and loss by class, P&L by class, changing the dates up top from 01/01/21 to 12/31/21. So there we have it. And we're in the 7 series. We have the insurance. Here's B2's column. And so there's the bill that we just entered for B2. So that looks good on the profit and loss side. Let's take a look at the balance sheet side, which is our major concern here. Now we have 2 accounts payable accounts, and the second accounts payable account here is for B2. Now, obviously note that if we were using this method, then we wouldn't have anything populated possibly in B2 and possibly not for the personal in the first accounts payable account, because everything would be going in, everything in this accounts payable account would be for B1, and everything down here would then be for B2. So because this was a continuing problem, we entered some transactions into the accounts payable in B1 up top. But you would imagine you'd have that kind of double check here that you could be putting it into the 2 categories. And then if I was to pay a bill, let's say I go to the home page and I pay that one off. If I go back up to the pay bill, and I'm going to pay off the one, notice I have the option again now to manage over here between the accounts payable for the B1 accounts and the accounts payable for the B2. And this would be the major advantage that you would have to having 2 accounts payable accounts, is that especially if you have 2 different people that are kind of managing the payments, then you can toggle back and forth to the accounts payable applicable to you, to your business, or the one that you're looking into at that point in time, and sort in that format. So before we enter one, let's enter a couple more in B2. Let's say we're going to enter another bill, and we're going to enter another bill into B2, and we're going to say we have insurance, we had travel, let's say. So we'll say travel, and this is going to be for $570, and this is going to go into B2. So once again, bill's going to be increasing the B2 bill now into the B2 column on the balance sheet into the 7 series, which is the B2 series on the income statement, and B2 class on the income statement. So we'll say save it and close it, and say, all right, let's take a look at the profit and loss in the 7 series down here. We just did travel, which I put into meals and entertainment. Kind of got a little confusing, but here it is, bills and check. That looks good. Other side's going to be in the balance sheet. And so now we have another item here that increased the B2 item. So if I double click on that, so there we have it. So that looks good. Closing that then back out. Now let's see if I can run reports based on these items as well. So if I went to the reports drop down and I took a look at the vendors and payables, and I say I want to look at the vendor payable detail, or the vendor balance detail report. So this gives me everything. If I want to break out by B1 and B2, company 1, company 2, location 1 or location 2, and I have 2 accounts payables, I can then go to the filters option. We could sort by account, and I want to sort not by all accounts payable, but by a particular accounts payable, and then just go down to the account payable that we want to be utilizing here. So say for B1, okay, and now we have just the B1 account payable activity. We could do, of course, the same for B2. So we can kind of break out our sorting filters tab up top, and we could say, all right, I want just B2's activity. And here's the items that we entered in B2, the 1,570, then lining up to what's on the balance sheet, which is going to be that 1,570. Now you do run into a problem here. What about those items that you're going to be allocating? So if I'm entering a bill that I need to be allocating on the expense side of things, because it's one bill, one vendor I'm going to be paying, and then I need to allocate it between B1, B2, and B3, say for the home office or something like that, then on the accounts payable side, that gets a little bit messy. So there's a couple different ways you can do that. I mean, we might just allocate it out to whatever company we're designating to be paying that off in order to manage the paying of the bill. So for example, if I go over to the home page, and let's say I'm going to say enter a bill, and so I'm going to go back up to B1 this time, and I'm going to be picking up a bill, and I'm going to say that this is going to be one that we're going to have to break out between the areas. So we have the rental agency. Let's say the rent that we're going to be paying. So let's say it was $3,000 on the rent that we're going to pay, and I'm going to say this is going to be rental. So let's say this is going to be rent that we would break out between the 3 locations, because we would have personal, B1, B2, and personal that we would have to break out using some kind of percent. Now I can pull these 3 items out, which would be correct on the expense side of things, but it's all going to be going to the B1 account. So it'll break out by column in B1, but it'll be in the B1 account payable instead of having a portion in B1 account and B2 account. So it'll be correct in terms of classes, but it'll be kind of like wrong in terms of going to the right account of accounts payable B1 and B2. It's not going to be breaking out between the accounts payable accounts. Now that's not really too much of a problem if you just determine you're going to say, okay, the rent is always something that I'm going to pay out of accounts payable 1, because really the reason you have 2 accounts payables most likely is that you want to be able to sort the accounts payable by company, so you can sort what is owed, by company. And those things that you're going to be paying that are going to be allocated to different companies, you might just say, hey, look, I'm just going to manage those in one company or the other. So for example, I'm going to say, hey, look, I'm just going to manage the rent in B1 account. So I'm going to sort it and pay it out of the B1 account, even though it's going to be allocated on the expense side out. So it's not going to be in the right account, but the classification will be correct. So let's check it out. If I say 3,000, let's say this was going to be times 0.5. I know these percents aren't the same we used last time, but I'm going to use these percents. And this is going to be 7,710, and this is going to be 3,000 times 0.3, tab, and then 8,710. And this is going to be the plug, and there we have it. So what's this going to do? It's going to increase the accounts payable, but it's going to be in the B1 accounts payable instead of breaking out between B1 and B2 and personal, because we only have 2 accounts. I didn't set one up for the personal. But it will break out by class in that one row. And then down here, it will break out both by account and by class, 6 series, 7 series, 8 series by account, and then by class columns B1, B2, and B3. So let's check it out. We'll say save it and close it. Save it and close it. And then I'm going to go back to let's go to the profit and loss first. We had the rent. So the rent for this one is here in the 6 series, and it's in column 1. So that looks good. Looks good. And then rent for the 7 series is in column 2. So that looks good. And then rent for the 8 series is in column 3. And so that looks good. And then on the balance sheet side of things, if I go to the balance sheet, then I'm going to say, okay, now if I go into B1, the rent is here. So here's the rental agency. It's allocated correctly in terms of the proper class. So the classes are right. So the class is there. This one got allocated to this class, just like we did in the prior presentation. But it's in kind of like the wrong account because you would think part of it would be down here in the second B2 accounts payable. So again, it's not really that big a deal because it's in the right class if you have a system of saying, hey, look, those things that are going to be allocated out, I'm just going to assign to one class or the other. And when I manage them, when I manage the payment, in other words, when I go to the home page and I look at paying the bills, then I'm just gonna include the ones that are going to be allocated out in B1, right? And the reason I want to have 2 accounts really is so I can toggle between B1 and B2 and sort my payables out by company. But those items that I'm going to allocate out between the companies in terms of classes, I'll just assign to B1 in this case, and then I'll pay them out of B1. So let's do one more scenario. We might say, okay, well, what if like I have something that I'm going to break out, but I don't know what the percentage are yet. I don't know what the percentages are at this point. So I'm going to enter the accounts payable and either put it as unclassified, or I like to assign a class that says not classified so that I can say, hey, I purposely put this into a not classified class so that I can then determine where to allocate it or the percentage that I want to allocate in a future time. So for that, I might say, okay, let's go to the home page and let's enter a bill. And let's choose another one that we have to allocate out. So I'm going to allocate one out, and I'm going to say it's an allocatable type of thing. Let's say the utility bill. We're going to have to allocate that out. and let's say that's for, let's say just 2,000 to make it even so that we can allocate it. And let's say I don't know yet what the allocation should be, but I know it needs to be allocated between the 3 utilities because it's part of my home office type of deduction. So what I would do then is possibly put it, as we did before, into one class, possibly the 600 series, which I then classified as NC instead of B1. So I'm going to say I want to put it into NC, which will put it into a column of unclassified telling us, hey, I need to go back in there and classify it at a later time. So this will then increase the bill, accounts payable. It'll be putting it into the B1 section so we can pay it out of B1 because it's one of those areas that need to be allocated. We didn't allocate it down below because I don't know what the percentages are yet. I'm going to put it into the NC category to indicate the fact that I don't know where to put it yet because I don't have the allocations yet. Well, I might need them from the tax professional. So I'm going to say, all right, let's save that and close it. And then check it out. So if I go to the profit and loss, then it's in the 6 series numbers, which would normally be in B1, but we purposely put it over here into not classified because I know I'm going to have to allocate it out and I don't know what the allocation is. So when I do, I'll go back in there and I'll allocate it out. On the balance sheet side of things, we have this amount in the accounts payable once again in the not classified section. And now let's pretend that we paid the bill and then we want to go in here and classify it. So let's say we pay the bill now, and that will move it from here up to the checking account. If I go to the home page, and then I'm going to say that we're going to pay this thing, pay the bill, and we're going to pay the Edison bill here, and then it's going to come out of here. That looks good. I'm going to say pay the bill, pay it, and this is going to be E8, and okay. So now I'm going to go back in, see what happens. We're going to say now it's been paid out of the accounts payable. So the accounts payable should be going back down. So it was in B1. I'm sorry, closing that out. It's in B1 in this item in C, and that's closed back out. And then the other side is up here in the cash. Now the problem kind of here is that now it got allocated to NC column on the cash side of things. So now let's pretend that we know what the percentage breakout should be now. Now I know what to break out the percentage should. So normally then I would go back into the profit and loss, and I'd like to alter this. I would like to go back and drill down on this item and allocate it out between the percentage that I need to allocate it between. But I have a problem with that because I paid the bill already and it's already been paid, so it might not let me adjust it. So in other words, typically I'd go back in here and say, okay, now I know what the amounts are. It's going to be 2,000 times 0.5, and this is going to be the 78600, and this is going to be 2,000 times 0.3, and then I got the 8, then this is going to be 8860, and there's the 4,000. So if I allocate this off, the problem is it's already been paid, right? So if I say save and close, this transaction is linked to others. Are you sure you want to save it? I'm gonna save it. Let's check it out. This transaction is more than I'm gonna say okay. And then let's close this out. Closing this out. And so now the allocation here. Let's hold on one more second. I'm gonna double click on this. I didn't change the B1. Let's change B1. This should be from here to B1 now. This should be B1. B1 with the world. So we're going to say save it and close it. Save it and close it. And then close this back out. All right. So now we have it over here, utilities. That's correct. So we broke it out. And then down here, we've got the utilities in the 700s. And so that's broken out. So it looks like it's doing what we want as expected. On the bill side of things, let's take a look at the balance sheet. What did it do to the balance sheet? So it took it out of that. It did take it out of that column, and actually retroactively. Then if I look at the checking account, it actually then did split the bill up. It went back up there and it adjusted the linked payment. So you can't actually do that, and it'll sort the whole balance sheet out, even if we paid the bill. So that works better than I had actually thought it was going to work. So that's pretty good. Okay. So the other way, and if you don't want to go in and adjust, if you don't want to go in and adjust it, you could do a journal entry to adjust it. But then if you do the journal entry, you'll have to do one on both sides, one on the income statement and one on the balance sheet to adjust both sides so that your balance sheet will adjust out. But if you drilled back in on it, on the bill, and reallocate whatever's in there, then it pulls through even if you paid off the bill and allocates off correctly. So there's two accounts payable.